Alright, let's get into it. If you looked at your portfolio this week, you probably wanted to close the app and pretend it wasn't happening. Meta is down over 30% from its high in January. The S&P 500 just had its worst day of the year, and everybody is suddenly using the R word, recession. Is this just a dip, or is the music finally stopping? Today, I'm breaking down the 3 massive facts killing Meta right now, exactly how I managed my own Meta options trade this week to avoid a massive cash hit, and whether we are actually heading for a global economic shutdown. Now, if you watched my last video, you know I had a $565 put option on Meta that expired on Friday. Look, I'll be straight with you. The chart looked ugly. With the way the price was sliding, I did not want the assignment, which is just a fancy way of saying I did not want to be forced to buy 100 shares at $565. That's a $56,500 cash hit for a stock that looks like it wants to keep falling. So I decided to roll the option. For those of you new to this, rolling just means I closed my current trade and opened a new one further out in time. It's like rescheduling a meeting that was going to be a disaster. I bought back $565 put and immediately sold a new one for June at $525 strike. By doing this, I basically bought myself 3 months of breathing room and lowered my potential buy-in price by $40 per share. The best part? Because I added more time to the trade, I actually collected $157 credit for making the switch. I am literally getting paid to wait for a better price. But I'm not totally sitting on the sidelines. I still want a piece of Meta if it bounces. So I did a little pivot. Instead of being forced into a huge 100-share block, I just bought a few shares manually. This way, I have some skin in the game without the risk of a massive cash drain if the market decides to go even lower. So why is the chart so gross? It's a perfect storm of 3 facts. First, the capex cliff. Zuck is spending between $115 billion and $135 billion this year on AI. Unlike Microsoft or Amazon, Meta doesn't have a cloud business to rent that tech out. It's a massive internal bet, and Wall Street is losing its patience. Second, the legal liability. Recent jury verdicts in LA and New Mexico basically found Meta liable for addictive design. If it sticks, the legal floodgates open, and that's a nightmare for stocks valuation. Third, the 200-day break. We officially snapped below 200-day moving average. Once that happens, the institutional bots start selling automatically. The momentum is officially broken for now. But it's not just Meta. The whole market is on edge because of the war. We are starting at April 6th deadline. That's when the US ultimatum to reopen the Strait of Hormuz expires. Right now, about 20% of the world's oil is stuck behind that blockade. Oil popped over $110 a barrel this Friday. And as long as the strait is closed, inflation is going to stay sticky. So, are we heading for a global recession? The check engine light is definitely flashing. We have a massive supply side shock. When you choke off the Strait of Hormuz, you lose oil, chemicals, and the raw materials that run global factories. Most analysts now put the recession risk for 2026 at 40%. As you can see on the indicator here, the chances of recession is 40%. If that April 6th deadline passes and we see a major military escalation, that number probably doubles overnight. We are one bad headline away from an energy crisis that could grind global growth to a halt. Bottom line, watch the levels. For Meta, keep an eye on $520. If it holds, we might see a dead cat bounce. If that breaks, $480 is the next step. That's why I rolled my put to $525. It gives me that extra breathing room. I'm staying patient and keeping my cash ready. This isn't the time to be a hero. It's a time to manage your risk. Let's look at the charts. S&P 500 is down to 6,400. Nasdaq was down 2% to 23,328. AMD was holding up well. It's $202 a share. Meta was down significantly and closed about $525.72. Google was down because of the lawsuit, and it's down to $274.34. NVIDIA is down to $167.52. Microsoft is down to $356. That's actually quite a good level to buy. I am buying some positions in Microsoft as well as Meta. Tesla is down to $361.88. Apple was down to $248. It's just hitting the 200 SMA. Silver and gold were up. So silver was up 2.5%, same as gold. Gold was up 2.5%. It's because of that big correction which happened in the metals. And that's it for today. I'll see you next time.